Hello, and welcome to another episode of The Trade Stylist, the place where we try and craft your trade. Um, as you know, this is week of 17th February 2024, and we come to you from Montenegro this week. We start with the disclaimers, obviously, that all views are personal, and in trading, especially commodity trading, you can lose more than your invested capital. So please be careful and please have risk metrics when you trade. So once again, hello, I am David Jyoti, also known as the DJ, and I'm here to craft your trade. And you can find me at the Trade Stylist on YouTube, on Twitter, and on Instagram. So we start with always a prayer. May the trading gods be with us always, and we move towards the market update. This is about how the markets moved this week, and we look at for this week. First, starting with Robusta, which is down by 3%, Arabica down by 0.4%, Cocoa London and Cocoa US on the hand, continuing their uptrend by almost 14.8 and 6.2%. Orange juice is down by 0.8%, while cotton strongly up at 7.8%, sugar, however, also down at 3.8%. Coming now to the next of the grains, we have wheat, which still continues bearish at dropping by almost 6.7%. Corn also negative by 5.9%. Soybeans at 1.2%, and soybean meal at 3.1%. Soybean oil, on the other hand, has recovered slightly to go up to 2.2%. YTD, all the year, the soft complex has given back a little bit of the gains, while the grains are still negative and they're strongly negative over the year. Cotton, as I said, we have gained. Arabica is almost at par with last year, and that sort of gives you the overall framework of what it could have been had you invested your money last year into any of these commodities and held for the entire year. We now look at TradeSpeak, which is where we talk about how the markets are doing and why they're doing this way. So this is where we talk about the market's movement, which is specifically the what, the why, and the when. And if we look at how the markets have moved in this last week, what we would see quite objectively is that there's still a lot of power in the soft complex. So the markets are still moving up and the hedge funds are still strong. I think there's been an article that has come out talking about how the hedge funds have played in cocoa over the last year, and how the markets have been sort of pushed to the extreme, which compared to some previous years ago, 10, 15 years ago especially, would have not been the case, because the fund flows were sort of limited in the commodity and the soft commodity space. Grains traditionally have been a hedge fund play for a long time, but soft complex more so in the last 10, 15 years, being a niche market and what we call as a narrower market, have been impacted by the hedge funds quite strongly. Now, I am definitely looking at this, uh, especially on the softs, especially on the cocoa side, with the amount of power that the hedge funds have, which means to say, traditionally speaking, the last time cocoa had so much impact was that the entire market was long by around 1.4 million metric tons, um, speculator level. Today, if you look at the reports, most of the hedge funds are long around 1.1 million metric tons, which would tell you that they still would have enough play to still move this market up. But at this point, the market is already up by 35 to 50% basis where the positions would have started playing out. Uh, some cases, on an average, they would even be as high as 60, 65%, which is a tremendous return. But that's also a cost of working capital. That's also the amount of money that I need to progressively put in to earn additional margins on top. And there are potentially other opportunities during which they would go. So they would have to free up cash capital to take new positions in other commodities. And which is why I do feel that while there is still some potential for the market to go up and stay up, um, I think we are past the extremes. I think we are close to the end of the extremes if we have not passed them. Um, and that would mean that we would start seeing some long liquidation slowly. That does not mean the cocoa market starts falling, but that does mean that the spreads start coming off sometime. And that's something that we need to watch. On the other side, the grains, I think, have been beaten down very badly. And it would be quite not surprising to start seeing some moves as we go towards the end of March, seeing how these markets play out and how the recovery starts happening, if any, for the grains markets. Now we come to Trader Puig, which is the points of attention that are there in the commodities. And we start with the headlines for the week. And number one is that the USD has risen again after strong US PPI data. Oil is still rising on Middle East issues. Cote d'Ivoire has seized 100 metric tons of cocoa near the Guinea border, which is basically illegal smuggled cocoa, which was caught. Nigeria's CBN, which is the central bank, limits FX transfers by crude oil firms. This is to sort of shore up the US dollar and naira sort of exchange rates. And then you have Indian farmers also on a protest march. This is not exactly similar to what is going on in Europe, but again, farmers are becoming more and more important, as we all know, into the political scenario. Ukraine and neighbor grains export rows on the way are still continuing, where basically the European neighbors are not very happy with low priced Ukrainian goods coming into their markets and spoiling their prices in the market. Raw sugar prices, on the other hand, are expected to gain by 20%. Now, this is as per a Reuters poll, and this is primarily driven by a shorter crop estimation and also a higher demand for sugar and ethanol products into the coming year. We take these polls with a little bit of caution. Upcoming reports this week are definitely the US FOMC minutes, which give us an idea of how the Fed is probably going to think. UK retail sales, US PPI, and the Germany manufacturing PMI. Going into the market, we now go in towards controversy, where we talk about the tales, the legends, and sort of the myths of cocoa. And commodities, typically, we are always subject to different kind of risks. And one of the major risks that we come across is that we don't see typically what and how a document trade flow happens. And that where leads to this typical issue, which we call as the certificate of origin fraud. What is a certificate of origin? Typically, it's a document as shown on the chart here, which tells you where the goods have originated from. And does it mean that the goods are typically grown in that country? And does it mean it's getting shipped from that country? Well, no. The first point is the correct one. It typically should tell you the origination point of the country of the goods. It does not necessarily have to do anything with the country where it's being shipped. So, for example, there are landlocked countries which are also exporting, but the landlocked countries then would export through another country's port, but the country of origin would still be the landlocked country, which it is. However, the reasoning of this happening is because some countries either have a preferential pricing for the commodity of that country, or it can be that there are duty friendliness that are there with this country origin, or simply because there are some financial gains that can be made by shipping from that country and receiving the monies in those countries. And this traditionally happens quite a lot with physical commodities, physical agri commodities in the world. And I'm going to talk about an example, primarily of cocoa. And this is just an estimated number of how much volumes have gone from cocoa from Cameroon to Nigeria. Roughly, this is 2020 basis, and this 1 year. It's not a longer term. Estimated 35,000 tons at 2020 levels. Cote d'Ivoire to Liberia, close to 80,000 metric tons. Congo to Uganda, roughly 40,000 metric tons. Congo to Tanzania, another 10,000 metric tons. And then Cote d'Ivoire to Sierra Leone, probably another 20,000 metric tons. And this is a single year. So if we add up all of these, this is close to 160, 170,000 tons, which even then, roughly with cocoa at around $3,000, is roughly $500 million worth of goods flow. And this is, of course, an estimated number. There's very little data surrounding it. But you can sort of make out if you get trade reports from these nations and trade report of exports from these nations, which tell you how well or how badly this impacts the real flow of the commodity investment. And this does not mean this is the only commodity. It's just a commodity that we have very close association with and which I can talk about. So we need to be extremely careful about buying a commodity from a country, from a supplier. And that's why the entire story of traceability, certification, and sustainability comes in, because the benefits of a higher price should translate towards the country which is coming in. It also is a way to avoid sanctions. It also is a way to sort of bypass regulations, bypass phytosanitary requirements. And that's some things that we need to be very, very careful about. So yeah, this is a huge, huge issue in the trade industry, and it has definitely impacted more than some of the biggest companies in the world. So the next time you get an offer which is too good to be true in the commodity trade, typically it would turn out to be too good to be true. Moving on, we now go into tradecraft, and we look at what the trades are for the next week. Well, we have some couple of trade setups. And number one is the cocoa trade setup. And I think that if cocoa May US fails to break above 55.87, it probably gives us a shorting opportunity with a target of 45.86 and with a stop loss at $5,800. This is per lot. The sugar trade setup still is there. It has not been negated, so I'm still keeping it active. So if it breaks on 24.62 upside with a stop loss at 22.69 and we take profit at 27.66, the sugar bull is saying the market should go up by 20%. My models will continue to update, but yeah, it's still bullish in my opinion. But it has not yet broken up. And unless and until the break happens, I would not suggest a position. Finally, for next week, we have again another episode of Controversy. We look at risk management, of how to manage risks with low capital, and then hopefully we trigger some more trades and let's trade some more. So thank you for once again joining in on this episode, coming to you from all of these nations. I hope you guys all enjoyed it, and I hope you guys enjoyed the new logo that finally I worked on. And I wish that I have been able to add some value to your weekend. See you hopefully on my next episode on the 24th of February, 2024. Thank you. Wish you all a happy new week. Bye.